The broadcast is now starting. All attendees are in listen-only mode.
All right, everyone, welcome to the weekly webinar. Every Wednesday, I'm here with you, Neil Green again, talking about the events of the same week. This time we're going to talk about an event that actually is going to take we have a whole month to trade, the earnings season. The first earnings season of the year, very important. Okay, let's start with a technical check. Okay, I just want to see that you can hear my voice, see the screen. You have a chat window, just let me know if there is any technical problem you have or whatsoever. Of course, if you have any questions during the webinar, you're more than welcome to ask me. Okay, right on the chat window, I'll try to answer your questions in between. And of course, I'm going to leave some time for some Q&A session at the end of the webinar. So right now, I just want to know if there's, just write me down the chat window that you can see the screen, hear my voice, and then we can start the webinar. Are we good? Okay, I see some familiar names, I see some new names here as well. So I'd like to thank you very much for the emails that you sent me in the past week. Okay, we've been doing this webinar every Wednesday, just for you to know, talking about the events of the same week. The first one takes place at 8 a.m. GMT time, and the second is right now 4 p.m. on GMT time, since, as you probably know, we have customers from all over the world. So, okay, you ready to start? Anyone has any technical problems? Can you hear my voice? Can you see the screen supposed to say earnings season preview? Everybody sees it clear? We good, guys? All right. Okay, then. Let's start. So the earnings season, all right? The earnings season actually takes place once a quarter, every 3 months in the United States of America, as you probably know, the strongest economy in the world, which gives us a lot of trading opportunities. And I would like to, in this occasion, thank the U.S. market for paying me a lot of money in the past year. I guess to all of you, it was pretty easy trades. But let's talk about the earnings season. So this earnings season is going to start now in January, all right? It's the major earnings reports is this week, all right? Talking about the fourth quarter of 2016, as I told you, once in 3 months every quarter. All the big companies, the big corporations that has stocks, shares out there, they must hand out reports in order for us to understand the situation. And for us as traders, it means that it gives us a lot of opportunities to trade and to make a lot of money according to these reports, okay? Because then we're going to know exactly where the market is going. So this earnings season will provide both quarterly and annual reports. As you probably know, right now is January 2017. It's the beginning of the year, and we get the annual reports of all of 2016, okay? It's going to be very effective, all right? This season will last for over a month and end in mid-February. Great. Earnings season is considered the best time to trade stocks, okay? Because we're going to have a lot of movement in stocks, and this is a great opportunity to trade stocks. Now, traders use publications in order to receive soil direction. Lots of trades could be both short and long-term. Okay, I'm going to talk about the differences. Many times trends involve after specific publications, and the first trend that usually forms is the bank trend, all right? The earnings season, at the beginning, we have all the banks, the financial sector, and then the technology sector, and then what I call the low-tech, the industry. So at the beginning, from starting 13th of this month, this coming Friday, we're going to have JP Morgan and all the banks are going to publish. And then the technology, okay, Apple, Google, Microsoft, and so on, and then the other stocks in the industry, they're going to hand out reports. Now, if we know how to trade once, we know how to trade during all this time. So we have more than a month to make money every day, to take some good trades. Okay, I want you to take advantage of it in order to build up your account. So JP Morgan, Wells Fargo, and Bank of America will publish on this coming Friday. Okay, Goldman Sachs and Citi could react to publications. Now this is very important what you see here, because US banks considered highly correlated. Okay, let me explain. Most of the, the American banks, all right, most of the financial system in the United States of America is domestic, which means that the US banks, they work usually not usually, all of them in the United States, and they're highly correlated, which means whatever happens with their stocks happen the same. Okay, we're gonna see the same reaction. For example, if we take a look on JP Morgan, let's take a look at JPM at the chart. This is JP Morgan. This is a daily chart. Here is a daily chart of JP Morgan, which means that each candle that you see here represents one day. Traded at the highest, near all-time highs, all right? $87. Look at what happened. These are the elections, November 8th, November 10th, you see? This is a candlestick chart. A green candle means that the price of the stock went up. And of course, a red candle means exactly the opposite. Okay? All right, great. And then we had the interest rate decision. Interest rate went up for the second time in 10 years, first time this year on December 14th, from 0.5% to 0.75%. We talked about it in past webinars. And we expect 3 hikes of the interest rate in 2017. So the market right now, we have the Trump effect that we talked about. Trump actually his speech, he has a speech right now. It started 10 minutes ago. And if you look for trading opportunities, this is the time, but we're here to talk about the earnings season. So the Trump effect, he talked about tax cuts and about government spending. Market went up, boomed up like crazy. JP Morgan, now I want to show you something. You see, JPM went up. Now look at Citigroup, another bank. See, it's highly correlated. Looks exactly the same. Let's take a look at Goldman Sachs. Okay, put some lines here. We can take them off and look at this. Went up. Okay, so when we talked about banks, they all look the same. So why is it a good opportunity? Because if I see the report and I see the reaction of JP Morgan, all right, and Wells Fargo and Bank of America, okay, it's gonna reflect on Goldman Sachs and Citi. So they're going to react to publications because we have US banks considered highly correlated, okay? Traders can diversity their portfolio, right? You don't have to put all the eggs in one basket. Now JP Morgan traded near all-time highs, as I showed you. Just in general for you to know, okay, it starts with the bank, so I showed you great opportunity. They trade the same way. But if you want to trade on technology stocks, if you want to trade on all the industry stocks, you better look at the PE ratio, okay? I'm going to explain exactly what it is. If we like more risk, less risk, we're going to be more conservative versus risk lovers looking for volatile stock and index, and so on and so on. Now, let's try to understand. Let's go to Google Finance and look at Apple. Everybody knows Apple. They sell iPhones. I don't know if you heard of them. I'm just kidding. Okay. Apple right now is traded at $190, $19 per stock. You see the US market right now, it's open, so it moves all the time. We have a lot of details, the open price of today and so on, the volume. What I want to look is the market capitalization, all right? I want to make you right now a professional trader. Pay attention, okay? Write these things because it's going to really help you during this earnings season. You have a whole month to take options. And as you know, probably know with binary options, all you need is to be 1 cent or 1 pip above or below the strike price in order to win, and this is going to give you all the tools to do that. So the total value of a company, I'm just reading from here, is the stock in the stock market. Okay, this is how much, in this case, Apple worth. How much money they worth. It is generally calculated by multiplying the shares outstanding, how many shares they have, which is in this case 5.33 billion shares. Okay, multiply this by the current share price. If I take 119, this is the share price, multiply by the number of shares outstanding, 5.33 billion, I'm going to get what Apple worth, which is around $626 billion. All right, that's clear? let's go on for you to understand the numbers. Now, the EPS is earning per share, which means the net income over the last 4 quarters. This is an annual, yearly EPS. Of course, every earning season, we're gonna get the quarterly EPS, so you can divide it to 4. The net income of the last 4 quarters divided by the shares outstanding. So if I take the whole revenue of Apple in this case, how much money Apple made in this year, and I'll divide it by 5.33 billion, I'm going to get how much money it is per share, right? I take the whole income divided by the number of shares, and I'm going to get the earning per share, the EPS, which in Apple's case is $8.28. Good. Now the PE ratio, this is what I want to talk about, is the price to earning ratio. The share price, 119 point whatever, divided by the EPS, by the earning per share. And then I'm going to get the PE ratio, price to earning ratio. Now why is this number important to me? Because this number tells me how many years will it take this specific company, in this case Apple, to make a revenue, to earn money, to earn what it's worth back. Okay, in Apple's case, it's going to take him a bit over 14 years, as you can see, to make $626 billion according to the last 4 quarters, to the last 4 reports, to the last 4 reports that we had during the last 4 earnings season, report seasons. Okay, so if I like, okay, if I like volatility, okay, traders that want to see a bigger volatility, the price goes up or down like crazy, they would look for a higher number here, higher PE ratio. If the company is going to take more years to earn what it's worth, we're going to see a higher number here. A low number for more conservative traders, okay? Let me give you another example. Let me try to clarify it. Facebook, same thing. Let's take a look. Facebook worth, you see, around $360 billion. Now the PE ratio is it's going to take them 48 years, all right? 48 years. If you take the $124 per share, 125, and divide it by the EPS, you're going to get the fact that it's going to take them more than 48 years to earn what they're worth back. This is Facebook. Now, take a look at Amazon. Almost the same market cap, 375 billion. Facebook was around 360 billion. But the PE ratio is 181. Okay, why? Because the share price is very high, all right? They don't have a lot of shares, only 475 million shares. So it means that the volatility is going to be much higher, okay? Okay, great. For more risk lovers. Now, let me give you another example. For example, take a look at Tesla. Do you know what Tesla they do? Tesla Motors? They make electric cars. Now, how many electric cars did you see in the street today? I guess the number would be 0, right? We still drive on gas. So, if Tesla, the market cap is around $36.5 billion, all right? Now look at this. How many shares they have out there? 161 million. It's not a lot. The EPS is negative. They're losing money. They're losing, according to the last 4 quarters, they're losing $6.5 per share. So we don't have a PE ratio because they're losing money. So we don't know how long it's going to take them to make 36 billion. Now try to think about it. How come people are buying their stock? Actually, it's in a great situation right now. And the stock worth more than $227 per share. If this company is losing money, what's the ideal behind it, all right? What's going on here? How come they're losing money, but the price per share is high, okay? This market is based on expectations. Of course, Tesla is losing money. It's a startup, all right? They invest in research. They invest in paying salaries. They invest in renting offices, all right? Right now, what they do is they invest. Okay, they don't make a lot of income whatsoever. They lose. They lose. But in 5-10 years from now, okay, give you another thing. Look at this. Tesla, BMW, and Mobileye. I don't know if you heard about it in the last week or 2 weeks ago. They made cars that are gonna go out in the roads in Europe and the United States right now that can drive without a driver. Automatic cars, all right? You drive on the same roads as we drive, but we don't need a driver. What do you think happened to the stock price? Let me show you. You don't have to guess. Let's start with BMW. Look at this. This is a daily chart. You see, boom, went up. Mobileye, boom, went up. Okay, Tesla. Wherever you take call options, you win. Look at what happened to Tesla. Guys, this company is losing a lot of money. Okay, went all the way up to the resistance line here, $230 per share. Okay, so there's a lot of logic behind it. Now, we cannot trade, right? If we want to trade, we can, after these reports are published before or after the market is closed, which means we cannot trade on the report, but we can trade the day after. What I'm going to teach you right now is how to trade the day after the report. Okay? How do we trade the day after the report? When the report is published, all the banks and the big corporations, they're going to trade on the stocks between them. Okay? A good report, which means the EPS is positive. They make more profit than expected. They have more new businesses. Okay, the key numbers are higher. For example, Apple sold more iPhones than expected. They have more cloud storage, more music products. Facebook have more new subscribers. Tesla, for example, in this case, sold many more cars out of the Tesla 3 or whatever they sell. Okay, they have a new car without a driver. Okay. These things, we can see it all on the reports. Now, if we know how to read these reports, the day after what we see, let me show you. For example, let's take the last time Tesla reported. Let's talk about Tesla. Live, watch Donald Trump's first press conference since July. Let's see what he says. I'm gonna take a look about it later, another trading opportunity. You know about Trump, try to understand if he's really gonna do what he says. If he says the same thing after he's elected, because this is the first time he talks or not, it's going to affect the market strongly. Tesla Motors, look at this. Let's go to earnings. We're talking about the earnings season, so I click on earnings. Shut down the commercial here. Okay. You see, last time they reported, Tesla reported third quarter of 2016 earnings of $0.71 per share on October 26th. This beat the analysts, the 7 analysts covering the company, they believe that there's going to be another negative EPS. They're losing money. But actually, they sold a few cars on paper, so they made some money. It was expected to be minus 0.54. And the EPS was plus 0.71. Okay, what do you think happened to the price of the stock? Okay, yes, it went up. It wasn't the only thing, but the price went up. We can trade on the day after, and let me explain you how. Okay, so what we should look at, back to the PowerPoint, we talked about the P/E ratio, conservative versus volatile. Stock and the index, I'm going to talk about it right now, and EPS number and specifics. I showed you the EPS and the other numbers that we want to see. Now, the day after, here is Tesla. Tesla the day after, this is the 20, this is the report here. This is October 26th here, okay? And it was a good report. You see the day after it opened here at $210 per share. Now people ask me, how do I trade now? When the US market closed, I cannot trade. We had a gap up, price started here, what should I do now? So before you trade, please do 3 things. First one, resistance line, last time where the market, you know, the price went all the way up to here and then went down, and a support line. Here we can combine technical analysis with what we're doing right now during the webinar, which is fundamental analysis. Knowing how to combine those two will make you a professional trader. Now, we have a resistance line and a support line. First, we do the setup. We put the key lines before the trade. Price went up all the way up here to 210, right? The day after, almost at, and then started to go a little bit up, you see? Now, we're here. We don't know what's going to happen. Another thing, okay, is stock and the index. Let's look at the index. Tesla is traded, see here at the Nasdaq. Let me show you. You see Tesla is traded at Nasdaq. Nasdaq futures you can trade 24/7, 24/5, except for Saturday and Sunday. Let's go to the day after, 27, right? The report was on 26. Right now we woke up 20. This is October 27. You see this red candle? The Nasdaq represents the 100 companies corporation with the highest value in the United States, the technology corporations. Now, as you can see, on the 27th, Nasdaq went down. So the market went down, okay, which means, okay, we expect Tesla to go down as well the day after. Okay, back to here. So Tesla reported. Index goes down. We have a resistance line. And think about, the third thing I would like you to think about is all the people that bought here. Woke up in the morning, they made a lot of money. What would they do? They would sell. People sell, market goes down. All the way to the support line and even over. You see? So we had 3 indicators to understand this. Clear? Good. Stock and the index, EPS numbers and specifics. Now traders should prepare their trading setup per stock as I just did. Support and resistance levels before publication. Put some key levels. Support and resistance the day before. Look at the index. Okay, look at the VIX. Market sentiment considered positive. Okay, VIX trading low. Okay, VIX is the index of fear. Right now it's traded down here at 13. Oh, 12.80. Okay, right now the market is going up like crazy. We don't have a lot of tension. If it's over 14, it means that we have a lot of tension, but nobody knows, a lot of uncertainty. Right now we know where the market is going. Okay, if you look at all the indices, I showed you the banks, everything. Look at the Dow Jones. Almost 20,000 points, highest point ever. Look at the Nasdaq. All right, the market is booming. This is the best time to trade. The best time that I remember to trade, okay? Okay, I guess we're going to have some great reports. This is the time for you to make a lot of money. So write down these things. If there's something you don't understand, and of course, good luck, all right? Just ask me and we can start from now. How do we do it? You can go to the FMTrader, put in your email and password. I would trade for the same day. You go to stocks during the earnings season, binary option stocks. For example, JP Morgan had a good report. I saw the gap up. The day after, I go to Bank of America, whatever. Same correlation. I can take call expiry by the end of the day, put my 20,000 and make 35,000 in this case. Pretty easy. Pretty easy. Okay? Any questions? This is the time, guys. If there's something you would like me to clarify, to repeat, I'm here for you. You have a chat window, just write me down and I'll try to answer all your questions. Everything was clear? Okay, any of you that don't have accounts yet, of course you can go into our website here and open accounts. The rest of you guys, you can contact your account managers, okay, by tomorrow and or today and get some more specific information. Of course, you can email me during the week. I'm receiving all the emails all the time and try to answer everyone. I would like to thank you very much for participating. I'm going to be here just like now every Wednesday at 8 a.m. and 4 p.m. GMT time. And that's about it. Okay, so thank you very much for participating and have a great one. And good luck, guys. Take advantage of this month. All right? Right on. All right, have a great one. Bye-bye.